Hey everybody, this is Tim Dial with Nexa Mortgage, and I hadn't put one of these videos together for a while, so I wanted to do that and get it posted on my YouTube channel here. And I'm also probably going to maybe put it on Facebook and stuff like that. But hadn't done one of these for a while, but I wanted to update people on what's going on in the market, what we can expect as far as rates and things like that, because I believe that's important. I have some people I'm refinancing right now that I locked at the most opportune time. But I also know that there are some people that haven't started the refinance process yet, and it's going to make sense to do so before the end of the year. And so I wanted to go ahead and post this and let people know kind of where things are and what we're kind of expecting moving forward. So I'm going to go ahead. I'm going to share a screen here, and so that I can get into this and it'll make a little bit more sense visually here. And let's see. Okay, you should be able to see. It should be popping up on your screen now. And this is what the 10-year Treasury has been doing. As the 10-year Treasury moves kind of like the 30-year mortgage rates, and that's why I'm showing this graphic, is because this is what the rates have been doing. As you can see, we've started to move back up here. Right here is when I locked several people, because that was the most opportune time to lock. That's when we believed we were going to start seeing a little bit of a reversal. And that's what's sort of happened here, is we're starting to see a little bit of a reversal. This reversal will probably continue to some degree for a little bit. We might get up, into this range or something. And then what's going to happen is next week we will get, the Fed has their meeting and they're going to make a rate cut. Everybody's expecting 25 basis points. It's kind of already priced in. So if they do the 25 basis point cut, I don't know that it's going to move the market much because it's already priced in. There is like a 20 to 30% chance they could do a 50 basis point cut. If that were to happen, then we would definitely see the rates move lower because it's not expected and it's not priced in. So that's something to look for sure. And then outside of that, their comments are going to be huge, right? Whatever Fed Powell says afterwards, after the meeting's over, he'll come out and he'll do a press conference, right? And so if he talks about the weakening labor market and things like that and how they're very concerned about that and stuff, then it's going to signal that they'll probably do more rate cuts by the end of the year. And if so, the market will start to price in more rate cuts because they're expecting them to come, by the end of the year. Last year, it was a little bit unusual because last year they did 3 rate cuts from September through the end of the year. They were all 25 basis point cuts, but the rates actually moved up by the end of the year instead of down, but that was because of other data. There was some inflation data that came out, stuff like that. Right now, we have two things kind of working against each other. One is a very poor labor market, unemployment rising, people underemployed, people losing a full-time job and picking up 2 part-time jobs, and there's all this kind of stuff going on that shows a weakened labor market. So that's usually good for mortgage rates because it shows a weakened economy. But the other thing that's going on is inflation is sort of moving up. The PCE report came out yesterday, and the inflation's moving up. But a lot of people believe that the inflation moving up is primarily from the tariffs. And if that is the case, the Fed may look at that as a temporary or one-time move in inflation, not something that's going to be persistent, if that makes sense. So I don't know how they'll look at that, but their comments after the Fed meeting are going to make a huge impact. If they talk about the tariffs being a temporary inflation blip and that they think that it's not going to be something that's persistent, and if they talk about the weakened labor market and being very concerned about that, then we can expect those comments alone to cause the market to come back down. And then, if we do go back up into here, it'll probably come back and maybe get below this 4.0 here, and that's going to be the opportune time to refinance. We could see that happen next week, but I doubt it. It's probably more like, depending on the comments and stuff like that, we're probably looking at about 2 weeks away for us to get back down into this range and for us to have another really good opportunity to refinance. And that's very speculative. It may not even happen. We may stay in this range, or it may continue to go up. It just depends on on what happens with the data and especially with what the Fed says and what their comments are. So anyway, that's what I wanted to cover. Didn't want to spend too much time on it or make this too long, but I wanted to go over that really quickly and let everybody kind of know what's going on in the market and what we're kind of expecting. And it does come down to that Fed meeting and what they say. So stay tuned. I'll try to keep everybody updated. And if you have any questions or anything, I'm always here to help. Thanks.